What's up everyone? In this video, we're going to be looking at HPQ, which is up 16.5% today. It has some giant news about Warren Buffett buying $4.2 billion worth of this company. In this video, we're going to be taking an unbiased look at HPQ stock and seeing whether or not it is worth the buy. So looking at the CNBC article today, like I just said, Warren Buffett just announced that he took a $4.2 billion position in this company. That is giant news. Warren Buffett will now own around 11% of HPQ. Like I said, the HPQ shares are skyrocketing, and it's been a great day for HPQ. For those of you who don't know what HPQ is, basically it's HP. We all know this company. They have a lot to do with printers, computers, laptops, stuff like that. We basically all know them. And their stock, for the most part, is pretty consistent. We can see that over like the past 5 years or so, it has been rising in a very consistent way, but it has been kind of lagging behind a lot of other tech stocks. For example, over the past 5 years or so, HPQ went from I guess you can say $18 a share up to $40.50 per share. But if you compare that to any other major tech stock like Apple, Microsoft, Intel, I guess, Intel's been pretty stagnant too. But any other major tech stock, it's kind of been lagging a little bit behind. But that does not mean it's a bad buy, because Warren Buffett just bought billions of dollars worth of it. So looking at HPQ's fundamentals, they're interesting to say the least. When I first looked at this company's fundamentals, I was very alarmed because their revenue dropped off significantly, but there's more to the story. So basically, we can see that in 2021, they had an annual revenue of around $63 billion. Okay, $63 billion. We could see back in 2012, it had an annual revenue of $120 billion. And for some weird reason, we can see there was a giant revenue drop from 2015 to 2016. The 2015 revenue was around $104 billion, while the 2016 revenue was $48 billion. So I looked into this catalyst further, and if we go to the statements tab and we go all the way to the bottom, we can see that in 2015, they basically had a spin-off between HPQ, which is the HP that we were just talking about, and then HP Enterprise. So basically, in 2015, in everything up until 2015, they were one large company, but basically HP split off from HP Enterprise. So basically the two companies just split apart, and that's why we saw the significant drop in revenue as well as the significant drop in debt. Okay, so while it's never good to see a drop in revenue, this situation is kind of an exception because it's not like they're losing revenue because of something terrible happening. It's just because the company split into two. So instead of there just being one HP, there are two HP stocks out there. There's HPQ, which is the one Warren Buffett just bought recently. And there's HPE, which is the enterprise version of HP. Okay, so hopefully that clarifies what's going on with this situation. But back to the fundamentals. We can see that excluding everything pre-2015, HP's revenue has been rising in a pretty consistent way. In 2016, they had a revenue of $48 billion. 2018 had a revenue of around $58 billion. 2020, they had a revenue of around $56.6 billion. Then again, that was COVID though. So then in 2021, they had a revenue of around $63.4 billion. So overall, it's increasing, but it's not one of those stocks that have rapidly increasing revenue like Zoom or Tesla or anything like that. HP, it's kind of like a slower moving company. They're more of a stable company. They're not really in the growth phase or anything like that. They're just kind of a slow and steady value stock type play, which is exactly why Warren Buffett bought it. Well, there's other reasons too, but Warren Buffett's more of a value investor and he likes these types of deals. If we continue to look deeper into HP, we can see that they print money. They've been cash flow positive for a long time. In 2021, they had nearly $6 billion in free cash flow, which is giant. That allows them to definitely expand their business and reward shareholders by either issuing dividends or buying back their shares, both of which we've seen a lot of over the past couple of years. Overall, they're not a bad setup. Like I said initially, what alarmed me with this one is how their revenue significantly decreased from 2015 to 2016. But then again, that's an exception because the company split apart. What I really, really like about this setup specifically is how their shares have been decreasing. This is giant. Basically, we can see in 2016, they had around 2 billion shares outstanding. In 2012, they had 2 billion shares outstanding. Nowadays, they have 1 billion shares outstanding. So that is giant, and that's a very good thing. Basically, I guess you could say the lower the amount of shares are outstanding, the higher the share price goes. So that is giant right there. I love that. If we go to the statements tab on HP, we go to the cash flow statement, we can see that, especially over the past couple of years, HP has been buying back billions of dollars of their own shares, which is a very, very good sign. It's always awesome to see companies buying back their own shares. It's very beneficial for the shareholder. So that's awesome. Like I said, they did get rid of some of their divisions, we can say, which definitely did result in a drop in revenue, as we saw. But they are continuing to grow the revenue, which is good. So, if I illustrate that further, like I said, in 2015 and 2016, there was a significant drop in revenue. Since that point, they're kind of recovering from that. They also pay a really nice dividend of around 2.2%, which is really good for a company like this. Overall, they're not bad, right? It all depends on the type of play you're looking for. Obviously, someone like Warren Buffett, he's someone who's a value investor. He's not really looking for companies that have a chance to 10x their revenue 5 years from now. Historically, he's made investing decisions based off of value investing type plays. So that's interesting. Warren Buffett buying is almost always a good sign. He's one of the most respected investors on Wall Street, so that's giant to see him buying in. What does concern me about this is that while HPQ is in a good fundamental position, I just feel like they're not really innovating too much. I feel like even though their revenue has been increasing over the past couple of years, the past 5 or 6 years, I feel like they're not a very innovative company, and that is one thing that kind of turns me off a little bit. If I'm looking for a very nice value investing type play, I would probably scoop up some HPQ. But I don't really love those types of setups. Yes, I'll buy them here and there, but I've lately been focused more on the opportunities we have in the growth industry or the growth sector. So it's not a bad play. I did put in some assumptions for HPQ to get some price targets. We could see if you wanted a 10% every year for the next 5 years, and you think that HPQ would have an annualized revenue growth rate of 1%, a profit margin of 7%, price to earnings ratio of 6, free cash flow margin of 7%, and a price to free cash flow of $7, you would have to pay around $33.79 to get a 10% return every single year for the next 5 years. But, if you increase your assumptions just a little bit and you had your revenue growth rate at 2.5% and the profit margin at 10, which the profit margin right now is at 10 anyways, so that's big. So either way, it's not a bad setup. Warren Buffett is buying in. It's always a great sign. If HPQ goes back down to $33.79, that's where I will buy it, because these assumptions are crazy. If you just assume a 1% revenue growth rate and a 7% profit margin, it just makes sense. Even if we bumped up the profit margin to 10% and the free cash flow margin up to 9% on the bear case, you could buy it right now for anything less than $45.76. So right now the stock's at $40.50. So it really all depends on your assumptions. For me, I would like to buy it somewhere around around 34 ideally. If the market changes or if, the revenue growth expectations change and that can be different, but it's really not a bad setup. Just keep in mind that it's like a slow-moving play, the value stock. It pays a decent dividend. Buffett's buying in, and historically HPQ has been buying back a lot of its shares, which is a really good thing. So it's definitely not a bad setup. I'd love to buy in around 34. Honestly, I don't think it'll touch there again, but if it does, I'll probably be buying in right around there. Looking at HPQ on a technical level, it made brand new all-time highs today. It has a lot of momentum. We could see by looking at the max weekly chart. It originally had all-time highs around like $33 to $34 back in 2000. Since then, it's been stagnant for about 20 years, and it just broke out again. So it's really not a bad play. They have no resistance overhead because it's at its all-time high. If we want to look intraday, there is some resistance around $41.47. So you can keep an eye on that. If we look a little bit more in depth to like an hourly chart, there is some support right around $40 and another level right around $38 and then another level right around $35. So those are the major levels to keep in mind. There's a lot of volume flowing in with this one. At the same time, the market is a little bit weak. We are seeing increased selling pressure across the overall market, as well as some major tech stocks like Apple, Microsoft, stuff like that. So keep that in mind. But like I said, HPQ, it's not a bad setup. It definitely has potential, and the fundamentals are pretty good for the most part. They have a lot of free cash flow, which is awesome, and they've been buying back a lot of shares lately, which is something that I always love to see because it's definitely an awesome thing for shareholders. If you guys liked the way I analyzed HPQ today, check out that first link in the description and the description and the comments down below. Our dashboard just got a giant update. Basically, you can type in any stock and instantly see the most important metrics that is moving that stock. So we're looking at HPQ today. I can see the most important fundamental data points. I can customize and see whatever I want on a yearly or quarterly basis. I can have full access to the financial statements. I can highlight different tabs like this. I can do the TA dashboard, which is pretty awesome. You can compare any stocks against each other, see their correlations, and see how they've been performing. And then you could also calculate your own price target. So it's pretty awesome. We are always adding some awesome things to this dashboard. It just got a giant update. We're cheaper than our competitors. It looks very clean. You can use it on the computer, phone, tablet, any smart device. It's pretty awesome. You can cancel it anytime, and it's an awesome dashboard. And really, it shows you the most important data. Like, you don't have to sort through boring Yahoo Finance fundamental data and try and find things. Like, everything's in an easy to see and organized way. So definitely check it out. To that first link in the description and the comments down below. If you are new here, don't forget to subscribe. Besides that, thank you guys so much for watching.